Greetings, everyone. So, Ubisoft is back in the news again. Okay, realistically, they never really left. They've been spewing controversy after controversy, and their stock is now down again. Now, there's a few speculation as to why this is happening. The defenders are saying, well, a lot of company stocks are down after that Microsoft update issue yesterday. It's like, yeah, that shouldn't really impact Ubisoft, though, because Ubisoft is not a company that is going to be impacted by that massive outage. Okay, but let's set that one aside. The other one is claiming that the recent controversy Yasuke that's blowing up is why the stock is now down. Now, Yasuke was a black retainer in Nobunaga's court. Yasuke, by the way, does mean black person. So, yeah, he was never a samurai, and you have people claiming, oh, hey, you guys are just bigots, you guys don't know what you're talking about. Well, apparently, us gamer chuds, or Chud Inc. Incorporated, did know what we were talking about, because the Japanese government is now investigating the university, and the author Ubisoft cited as their source that he was a historically accurate person. Turns out he was never a samurai. The author who claimed he was a samurai was just doing so to sell books, and is now in hiding as his university is scrubbing his course, and what it looks like any and all association with him, as the Japanese government looks into both of them and Ubisoft. Now, this controversy could be driving the game stock price down, and likely does play a role in it, but I'm going to show you something else that's a bit more practical. Before we get into that, let me show you this. This is their Ubisoft's investors. As you can see, it has a lot of Vanguard. Now, these investment firms do what is called high-frequency trading. They use computers to rapidly fire off trades, and with this, they can affect how a stock's evaluation goes. They could force it up or they could force it down. Now, there's been discussion on how to fix this problem because it is legitimately a problem, and one of the more practical solutions was to assess a small tax to it. It never went anywhere because this was heard this years ago. I think the tax like 1 cent, 3 cent, 5 cents, somewhere around there. Could have been as high as 15, but I'm pretty sure it was pretty minuscule and closer to the single digits. Either way, what this would have happened, you're like, oh, that's not a big amount. Who's going to care? Well, you see, they fire off so many trades that within a day, they would owe the government over $10,000 in taxes from the frequency of their trades. And with this, they are able to prop up companies. So stock prices are not really a great indicator of performance. If you look at the Take-Two stock, they are about to post a $900 billion loss according to one of the financial statements. That's what they're projecting. So you would think, okay, $900 million loss, that stock should be creating. It's not. Some investors are actually saying to buy Take-Two. Now keep in mind this is how absurd this is. So, and I've covered this before. You can look at my prior coverage. Take-Two GTA cost $2 billion to make. So how long will it take them to make that money back? Between 3 to 4 years, if the game is a massive success. The game is going to put you in an open relationship. It is heavily in DEI. And I'm not here going to tell you, like, oh, Grand Theft Auto 6 is going to fail. Oh, hell no, that game is not going to fail. But keep in mind, it doesn't have to do gangbusters either. If that game doesn't sell in the 60 millions, 50 millions, 40 millions range, if GTA Online 2 doesn't do really well, that game's going to be considered a flop. And Take-Two, they cannot afford a huge flop because all that was financed with debt. So you would figure their stock would be down, but it's not. And that's because either investors are the dumbest motherfuckers on the planet, and I do mean true low information individuals, or they are intentionally rigging up prices because they don't really care about actual performance, which is why the stock market is by and large a scam. But having said that, this is Ubisoft's financial report. Now, it looks good at first. You just delve down, and you can see loss. Right here, loss. Here they claim that they made money, but like, oh, we made $401.4 million, potentially, because a loss is right there. Their report is kind of weird. And I'll be honest, I don't fully trust. I think they're trying to obfuscate loss because let's scroll down further. Now we're in the appendices. Let's see. Again, that 400 million went to 157.9. Loss in brackets again, which might just be referring to that, but again, you'll see what I'm about to say here. Or rather, what I'm getting at. Here's their debt load. It increased by over 500 million euros. How do you make money while having your debt increase? You scroll down further, you can see their net cash position underneath the IFRS standard. They've lost money. They have less money right now after making a profit than they did the year before. You cannot have less money, over 300 million euro less money, while turning a profit. That's not how that works. And if you look at their own internal metrics, it's just over 200 million. But again, loss. But they're going to try to claim, oh yeah, we made a profit. It's like, no, you can't make a profit. Your debt's up. Your money's down. So it's literally impossible with those two facts to have made a profit. Honestly, Ubisoft should probably be audited, as their financial statements aren't adding up. That's just my humble opinion as a lowly YouTuber. Now, why is this important? Okay, so they're not financially performing well, but they could make a good year. Because keep in mind, while I may be a layman, investment firms and professional investors, they actually have training or they understand how to read these. Well, I can speculate and say, hey, this ain't adding up. The math ain't mathing. They will more surely be like, hey, look, how are you doing good? Well, claim you're doing good while you're losing money. Have less money. That's not how doing good works. Because imagine if you told your friend, like, oh, hey, I made $5,000. And your bank account, like your debt's like $5,000 more or $5,800 more. Like everyone would call you on your BS, but in the magical world of corporations, you're allowed to get away with this. So they're not doing well. Now, Assassin's Creed Shadows, it's surrounded by controversy. It likely will not do well either. And then their next game for this year, which has insane licensing fees, Star Wars Outlaws, is equally looking like a flop. So investors are likely looking at this like, hey, look, you're surrounded by controversy. You have less money, even though you claim you're making a profit, you have less money. And your two games this year are going to look like they're going to be outright flops. So they're dumping. But fortunately, they have institutional investor Vanguard, who are not going to dump the shares. And I don't really know about AQR funds and these other major ones here. So I can't really tell you if like AQR's the BlackRock of Europe. I just don't know. So you're going to have to do your own research on that. Either way, institutional investors are largely what keep these companies afloat. So if they are allowing the stock price to go down, that says something. And that's all I have to say about this. Thank you for tuning in. Hit the like, subscribe, and I'll see you in the next video. Peace.